All right, guys. So just to repeat one more time what we are going to be doing, we're going to be going through the next $6 index pairs from top down for the monthly straight down to the 4-hour, trying to give indications of where price could potentially move within the next 24 to 72 hours. And then from there, we will be getting into the question and answer. So with that, let's get right into it. One thing to factor in, just like we've been saying in the past weeks, that we did in fact break above that 3-year monthly resistance, in which we did create a nice impulse to the descending trend line. One thing to factor in is that it was understandable if we were going to start rejecting off for a couple of reasons. We can see that that low was in fact broken. And on top of that, if you guys do look left, you can see that this entire base was where that previous dynamic support was acting, in which we could expect some type of bearish pending orders sitting there. At the same time, did make sense that, you know what, this could be treated as relief after that initial impulse, creating a lower high for further continuation to the downside, right? But one thing to factor in is that even though that this trend did in fact break out, a trend is not a straight line chop, but rather a consistence of highs and lows. And so until this low does in fact break out, momentum will still side with the bulls, but that is in a longer time frame perspective, right? You're looking at it from a shorter time frame perspective. You are still looking for downside based on that shorter term low being broken. Looking at it from the weekly time frame, the low that we are talking is being seen right here at that 121, 122 handle, where a couple of weeks were in fact broken. Like I said, buyers are still in power because this low did not break, but you are stating that momentum is still to the downside. Hence, any bullish pushes to the upside will be treated as short term, because of stating that the bullish movements are going to be liquidation or relief. And any bearish movements will be considered long-term or continuation of the initial momentum. So looking at it from a daily time frame as of right now, there are a couple of different ways that we can see structure play out, but let's hop straight into the 4-hour just so that we can see it from a bigger picture perspective. And so one thing to factor in straight away, guys, is that we can see that there are two types of trends that we do want to look at. One, we can see that after we broke this low, we can see that this was the first trend that pushed to the downside before this nice pullback or liquidation. And then from there, we saw another big push. Now, one thing to factor is that all of this is be treating as relief or liquidation for further continuation to the downside. But within this stage of relief or liquidation, we do see a short-term bullish movement potentially being formed after this high was broken, creating short-term higher highs. Hence, this is being treated as relief. And so if we do in fact break out, pull back, once this breaks above the daily resistance, that is your trade. We must be above the daily for you to see any continuation above. Now, if that doesn't fail to do so, this could simply break above and then from there start to drop below the monthly and weekly support. If that does happen, we do want to look for a small pullback, and then from there you could look for the rally back to the weekly support. Now, if that doesn't happen, guys, what we are going to be looking for is a strong push below the monthly support, followed by short-term continuation, and you could expect rallies straight down to the weekly support. Now, one thing to factor in real quick, guys, is that if you do look at momentum in its entirety, the last place that we are looking to buy EU is to the 121, 122 handle, because you are stating the entirety of the momentum is to the downside. And so if this keeps flagging out, it doesn't matter, because this is treated as relief or correction. It's just a bigger and deeper correction for potential continuation back to the downside, creating a structural retest. And if this does in fact break above, we will stop buying and let it prove to us that, you know what, this momentum is now invalid. But until then, any bullish movements to the upside, short term, any bearish movements to the downside, treat it as long term. USD CAD, one of the tougher pairs to be trading as of right now, simply for the fact that the Bank of Canada does want their currency sitting around 119 to 121. Hence, the institutions and the bigger players, the bigger cash, is sitting on the sell side of USD CAD, or the appreciation side of Canadian dollar, and on the retail traders, since dollar index pair has been moving to the upside, right? Retail traders have been pushing dollar up. So it's been a huge battle, causing a lot of whipsaws and causing a lot of stop hunts and things of that nature. Please factor in Canadian dollars economics just to start. Starts with an impulse, followed by a nice pullback or relief and another continuation. And then from there, we will see another pullback or relief, right? Now, one thing to factor is that you can look left, and once that low was in fact broken, we can expect now bearish pending orders to be sitting there, because the bulls did in fact own this area in the past. So the bears will in fact start to take over, as well as it does create a structural retest and a lower high on this descending trend. And so our goal is, hopefully, if this does break out, to get that big drop like we saw in the beginning of 2017. And so looking at it from a weekly perspective as of right now, we can see that structure is attempting to break above the monthly resistance sitting at 130.14, but please take into consideration that we did receive false breaks there in the past. And so one thing to factor is that this is a very decelerated and slowed and exhausted movement after that push was made. So it doesn't tell me that the buyers are in power. I'm still expecting that drop at least to that weekly ascending trend and potentially even lower if we can crack below the monthly to see another big impulse like this. Pulling it to the daily time frame as of right now, guys, there are a couple different scenarios to play out. There's no point of even looking at the 4-hour time frame simply for the fact that this is not something that you should be interested in trading in until we break above or below this previous area. So you're looking for an impulse below, followed by a small pullback, and then from there you can run it to the weekly ascending trend, or you are looking for a push above, small pullback, and then from there run it above to the weekly resistance. Trades must be above the weekly resistance or below the weekly support for you to be looking for any types of continuation trades, whether from a bullish or bearish perspective. Pulling it to the next chart, USD Japanese yen on the monthly time frame to start. Please factor in that there are two types of impulses being seen within here. Since this initial impulse became invalid once we broke this low, this is market momentum, so therefore this is all treated as relief for further continuation potentially to the 100 handle, in which we are going to expect that to start kicking in, treating all of this as a big flag for potential rallies back to the upside. Please factor in that the yen is factored in for depreciation against the US dollar as of right now. So just looking at this from a smaller time frame perspective, popping onto the weekly, we can see here that this, even though market momentum is ascending, this is quite decelerated or exhausted. And so with that, we are going to state that this is the first time that structure is now testing after it broke at the start of 18, creating a structural retest in which all bullish movements to the upside will be treated as short-term or higher risk, in which we are expecting continuations back to the lows and potentially even lower to that 100 handle, creating that a 1, 2, 3 pattern. Now, we're not stating that market momentum should just immediately switch, right, because momentum is still to the upside. So if you do see a strong enough crack above the previous low that it did break around 110.48 to 111.22, as well as that monthly and weekly resistance, followed by a small continuation pattern, that could be a rally and start of that bullish rally. But as of right now, guys, you want to be looking at what's been going on within structure. And even though we broke out of that ascending trend on the daily time frame, a trend is not a straight line shot, but rather a consistency of highs and lows. So because we didn't break the low, market momentum should still continue to the upside. It's not to say that this momentum is still not in power, right? But at some point we are expecting that, but this still could happen simply for the fact that market momentum is ascending. Looking at it from a smaller time frame right now on a 4-hour perspective, we can see here that market momentum is ascending, but a couple things can come about, and let's look at this from a bigger picture perspective. First and foremost, we do see a potential pattern being formed, which is that head and shoulders, in which we could falsely break the monthly resistance, creating a structural retest on the first initial low that we broke to start that drop, hence treating all of this as relief or liquidation for further continuation back to the downside. Or what we are going to state is that this will continue to rally to the weekly descending trend. And then from there, we're going to see what will happen. We will state that this is treated as relief. But if this does still continue to pop up, you're going to want to look for a small continuation and then start rallying that as high as you possibly can. But if it doesn't happen, you do want to see a sharp projection, falsely breaking that monthly resistance again, look for liquidation and start running that down to the weekly support. Now, if either don't happen, you're just going to see consolidation, and that is not something that you should be interested in. Now, some may ask, could they be taking trades on this basis at the low? One thing you want to factor in is that when we broke out of this ascending trend here, the reason why, not that one, this one right here, the reason why structure didn't make a deep sell is because we never broke out of where the base was formed after we created the first higher high when we broke out of that consolidation. And so that's why, guys, even though you could potentially get a short-term sell within here, it's not worth trading and fighting that. Look left. You see the rejection? It's not worth dealing with that. Take anything below that and run it to the weekly support, right? Now, pulling it to the next pair, pound dollar. Starting on the monthly time frame, guys, let's just take a look at how pound's economics are structured. We can see a very strong impulse followed by a nice long stage of liquidation or profit taking. It's very healthy for the economies to be doing that. And so we did see another one, and within it, you do see small reliefs and pullbacks. But now we were in a deeper correction. Now, looking at from weekly time frame, a lot of people are saying, well, that weekly ascending trend broke on pound. We should be looking for the big sell and not right away. Even though that did break out, not a straight line shot, consistency of highs and lows, we simply just broke first low. So we simply moved to, as some would say, the next zone, the next range, whatever you want to say in the end of the day. But structure just gave us good clues of where it could potentially pull off from after this big drop to the downside, which made sense since this had a lot of previous bearish, now turned bullish pending orders or support. Now you do see that being pulled off from there. Now, pulling again from the daily time frame, we were in a reversal pattern, right? we did make an impulse. We were reversing for a bit, then we created consolidation and then dropped again, making the structure even more extended at some point, looking for liquidation. We did now receive the liquidation, and so now we wouldn't be surprised if we saw a drop back to the lows and potentially even lower down to 127.68. But looking at it from a 4-hour perspective, there's no point in trying to predict which way it's going to be moving, because there are two possible scenarios that can come about. This is the previous low. You don't want to be looking at that. This is the previous low, in which structure potentially could be creating a structural retest on as of right now, with that 134.80 being tapped, right? And then from there, if we do in fact break out of the 0.5, definitely stating that this bullish momentum is now invalid, followed by a small continuation pattern. You could look to run that back down to the weekly support, creating that a 1, 2, 3 pattern and potentially breaking even lower to go lower, creating that 3 turning into a 1. Now, if that doesn't happen, this could potentially be the impulse stating this all is profit taking, in which you could see a strong impulse followed by a small pullback and start rallying back to the upside. Now, personally, if I was going to identify it, I would not want to be buying pound until we do in fact break back above the previous low that was broken. So for me, I would want to see a strong impulse above, followed by short-term continuation, no matter how far it pulls back, and then from there start rallying back to the weekly. I need to state that that is now invalid. If that doesn't happen and we simply pull back, let's say we flag out and we pull back to here and we start rejecting, I'm still not looking for the buys, simply for the fact that this will be all treated to me as relief, and we could potentially still look for another drop because there are a tremendous amount of pending orders sitting there from the bearish side. Looking at the last two pairs, AUD USD and NZD USD, please factor in that even though AUD USD broke out of its ascending trend, it didn't break out of the last low, hence warranting some type of pullback or liquidation, making it very easy to identify. Now, we are due for depreciation on AUD versus the dollar. You can see here that it's been capped at that 80 handle for quite some time, creating a beautiful flag or pennant, as some might call it. Now, looking at it from a weekly time frame perspective, it's not to state that the bearish momentum in AUD is over, but this was a good area of potential pullbacks. Now, one thing to take into consideration is that it does take exactly 4 months before the big push does happen. That is from behavioral analysis. So if that does occur, I wouldn't be surprised, because it takes exactly 4 months from the lows before we start really rallying to the upside. And so that would be quite interesting if that does happen, but I don't see that happening as of right now. Looking at AUD on the daily, when it made its impulse, it showed a 3-month reversal pattern in which we saw one more sharp move before a liquidation phase, which we expected. But now we are stating that structure is no longer really in some type of reversal environment. Could be still, if you're going to state that that momentum is going to still continue to the downside. But it's a bit too tough to figure out as of right now, simply for the fact that we could break out and start rallying to the downside, or that could hold. And from there, we could start rallying back to the weekly resistance. So with that, guys, make it a two-way structure. We are range bound to break, let it break the tops or let it break the bottoms. Going back to AUD USD on the 4-hour time frame, looking at it, guys, simply two ways, just like I said on the daily time frame. We do have that initial impulse to the downside, which you do want to keep in mind, right? Treating all of this as relief. And so either you're looking for that ascending trend to get broken. Why am I stating that and not this low? Because you don't want to be trading within here. That's too critical of an area. Once that does break, look for a small continuation pattern, potentially retesting the daily support, which would be newfound daily resistance, and then from there look to run it down to the weekly support. Now, if that doesn't happen, guys, you do want to see a very strong break above, stating that the break of this previous low is now, in fact, invalid. And then from there, look for some type of relief, profit-taking liquidation, and try to start running that back to the weekly resistance, okay? Now, failure to do either, that's going to range. That's not something you're interested in. Don't try to guess the movement. Let price prove to you it's going to move in the direction that you want it to move to. Last but not least, guys, NZD USD on the monthly time frame. We do see this initial impulse. Now, one thing to factor is that we were in a beautiful state of liquidation and relief until we did break that previous lower high, creating higher highs, stating that this is a short-term bit bullish market, but you have to factor in that this is having a very tough time breaking above, because you can see all the pending orders from the bulls that sat in the past, and once the bears broke through, they now take over. And so, you know, basic support, resistance, supply, demand, whatever you want to call it, at the end of the day, it's all the same. Price action is just price action. So looking at it from a weekly time frame perspective, you are range bound from these lows and these highs. And so within the range, you do see a short-term impulse breaking this, creating a short-term lower low, in which we are in a state of liquidation. The only bullish movements we're expecting back on NZD is back to the 71.58 to 72 handle, and then from there, there's no more buying on NZD because that would create a structural retest on the last low that was broken on that bearish movement. So looking at it from a daily perspective, guys, two ways that can come about. That is the impulse, in which if we do fail to break above the 70.42 handle, this formulated on the smaller time frames, which will show you a reversal pattern, in which if this does continue to drop, we are going to expect at some point that trend to break out, some type of pullback, and then you could look to run it back down to the lows of the range. Please factor in you are range bound. Once that does break, you could expect another drop straight to the monthly support. Now, if this does still continue to hold, and let's say it does break out, pull back, let's say it keeps rallying all the way to the weekly resistance, you're still treating all of this as relief. Look left, right, and you can see here that we did have a previous range of support or bullish orders, in which now we are expecting a lot of bearish pending orders to be sitting near there. So looking at it from a 4-hour time frame perspective, simply two ways. And so some of you guys were able to catch this New Zealand dollar trade after that impulse was made. It did show a nice reversal pattern, in which if any of you caught that previous low in the 1-hour time frame, shout out to you guys. And so looking at it as of right now, two ways to go about it. You either break this low, and you could look for a small retest, stops, move to break even once you get to here. And then from there, you could expect one more drop to the ascending trend. But once again, you don't want to be trading that anymore, because this could be treated as relief for potential rallies back to the tops. Now, if that doesn't happen, you're going to expect the drop. The real sell starts below the monthly support, followed by a pullback. And then from there, you can expect one more drop down to the base of the range. Remember, this is consolidated. Now, if that doesn't happen, looking at it from where it is as of right now, potentially could rally up, small pullback, and then from there you could target back to the daily resistance. Failure to do either, guys, will just warrant consolidation, and that should not be something that you guys are interested in. And with that, guys, these are the $6 index setups that we are looking for in the next 24 to 72 hours. And so with that, guys, I hope you guys enjoyed this. And so now we're going to be getting into the questions and answers.